What's happening to the world's fourth largest economy? In contrast to other large industrial nations and compared to Europe, Germany's economy is weakening.
For most of this century, Germany has been known as an economic force. From dominating global markets for high-end products like cars and industrial machinery to providing lots of jobs to their people, Germany's wealth grew as other European countries drowned in debt. People even wrote books about how other countries could be like Germany. But not anymore. Things have changed.
Economists and politicians believe Germany is once again the so-called sick man of Europe.
Today, as we speak, Germany is facing some serious economic challenges. Imagine this. It's like the top-performing student suddenly having a tough time with their grades. The International Monetary Fund and the European Union believe Germany's economy is going to shrink this year, which is definitely not good news. Germany used to be the big manufacturing powerhouse in Europe, but things are not going well now. However, things took a turn when Russia invaded Ukraine. Now, Germany is missing that secret sauce, and it has lost access to cheap natural gas from Moscow. People are criticizing and worrying about what to do next. There's a risk that Germany might lose its industries and jobs because of high energy costs and the government not solving ongoing issues. Christian Coleman, CEO of major German chemical company Evonik Industries AG, says it's a danger of deindustrialization. Speaking of industries, factory inflation, or otherwise the cost of making things in factories, is the highest it has ever been since they started keeping records in 1949. The major reason driving this is the price of electricity in Germany, which shot up by a whopping 600% in the year 2022 on the back of soaring natural gas prices to retail at $288 per megawatt hour, piling the pressure on business and consumers alike. Germany relies a lot on energy from Russia, and this dependency is eating them up slowly. Why, you ask? Well, the country is going through a tough energy crisis, causing prices to rise, and it is pushing Germany towards a recession. Now, Germany's numbers are in, and they are breaking records. Producer price inflation, a way of measuring how much manufacturers are charging for their goods when they leave their factories, increased by a whopping 37.2% in the year of 2022. Well, here is what's going on. Surprisingly, even during the tense Cold War period, when things seemed tough for them, the Soviet Union reliably provided energy to Germany. Taking 2019 alone, Russia supplied about 71% of its energy, including half of its natural gas and a third of its oil to Germany. However, little did they know a storm was brewing and change was on the horizon, ready to catch them off guard. Late in February, tensions hit the roof as Russia made a move on Ukraine. The already strained relations between Russia and the West worsened. Moscow decided to throw a curveball by slashing the natural gas supply to Germany through the vital Nord Stream 1 pipeline. Imagine a faucet turned down by 20% of its usual flow. So, what did this mean for Germany? An increase in the energy prices. According to the European Union's complex system, this meant that electricity prices in Germany have also gone up a lot, reaching record highs almost every day. Adding to the energy crisis, heat waves across Europe have depleted water levels on the Rhine River. This disruption is impacting shipping on a vital transport route for German factories. Preliminary survey data released by S&P Global indicates that Germany's manufacturing sector contracted in both June and July 2023. The combination of these factors is adding further challenges to the already strained economic situation in the country. A second blow came when one of its significant trading partners, China, started to slow down after enjoying several decades of robust economic growth. China is Germany's fourth biggest export market, but it is facing a series of economic problems that have crimped the demand for German goods. Speaking of China, as recently as 2021, it was Germany's second biggest export market. This shift is also the result of more fundamental changes in China's economy, and as a result, China's become a competitor and simply doesn't need as many German-produced goods as it did in the past. These external shocks have revealed weaknesses in Germany's foundation that were overlooked during the years of prosperity. Some of these weaknesses include a slow adoption of digital technology in both government and business operations. Furthermore, there is a lengthy and cumbersome process to get essential renewable energy projects approved, contributing to the current difficulties the country is experiencing. It is no surprise that pessimism is slowly creeping into the hearts of not just the German people, but everyone involved with them. Holger Schmieding, the economist who first called Germany the sick man of Europe in 1998, thinks the current wave of pessimism over its economy is overdone. We can all agree that inflation in Germany is running hotter than in many other European countries. Consumer prices went up by 6.2% compared to the same month in 2022, which is well beyond the average of 5.3% seen across the euro area. This kind of continuing inflation, often called sticky inflation, is really eating into the purchasing power of Germans, causing a sense of pessimism among households, as explained by Thomas Optz, a senior economist at the Cologne Institute for Economic Research. He adds that the recession in Germany, marked by 2 consecutive quarters of declining output last winter, was mainly caused by a drop in both private and public spending. And to tackle these prices, you know what the European Central Bank did? It raised its main interest rate to a historic high of 3.75%. Well, this higher cost of borrowing negatively hit the German residential building sector. Why, you ask? A survey by the IFO Institute revealed that over 40% of construction companies reported a lack of orders, a significant increase from the 10.8% that was present just a year earlier. The larger industrial sector in Germany, which includes renowned manufacturers like Volkswagen and Siemens, has also faced major challenges. The official estimate shows that there was a 1.7 year-over-year contraction in industrial output in June. Then in August, and since May 2020, a period when the country was just beginning to ease strict pandemic restrictions, German businesses' activity experienced its sharpest decline both in services and manufacturing. All in all, be ready because
inflation has dragged Europe's largest economy into recession, and economists seem split over how long it could last. Germany's output fell 0.3%.
Yup, you heard that right. If you thought all would be smooth sailing soon, then be ready to be pleasantly surprised. Capital Economics Kenningham said, adding that he expects the German crash in the first quarter of 2023 and continue. We've been forecasting a recession for a while. The discussion now is really moving on to how deep is the recession? To help you understand this, keep in mind that Germany's central bank is now anticipating inflation to increase from 8.5% in July to over 10%, marking the highest level since the early 1950s. Now, while Germany's economic growth is slowing down, this is bad news for its neighbors. Analysts suggest that the likelihood of a complete economic and financial crisis like what happened in the 2010s is unlikely in the Eurozone. The reason being that the European Central Bank's ECB has experience in managing economic slowdowns through emergency measures such as bond purchases. But for Germany though, their outlook is less optimistic. As the industrial powerhouse of Europe, it is evidently facing challenges and showing signs of economic struggle. Well, what might Germany's economic struggles impact the global economic landscape in the coming years? Share your thoughts in the comments below, and let's keep the conversation going. If you found this information eye-opening, don't forget to hit that like button and subscribe to our channel for more insightful content. See you next time!